Hi there, welcome to Nepi Invests. Really interesting times on the American markets right now. So I thought I'd just do a video about what's happening, particularly on the Nasdaq. But we're also seeing some interesting things happening on the S&P 500 and even the Dow Jones. Now these aren't really translating to the Australian market because the Australian market is highly dependent on resources and bank stocks. Those are the largest types of companies on the ASX, and actually they are doing fairly well, and they would do fairly well in this type of environment. But when we talk about the American markets, in particularly the Nasdaq, they are heavily reliant on tech stocks, and tech stocks have been under pressure over the past, well, in fact, more than 2 years. And even the biggest companies on the American markets, the Apples, the Microsofts, the Alphabets, have been under pressure recently. Initially, it was the smaller companies, the non-profitable companies that were under pressure, which was why ARK Investing Fund from Cathie Wood had been falling for over 12 months. But now we're seeing a fair bit of weakness in some of these biggest companies. Probably the strongest of the big companies is Apple. But not all American stocks are falling. There are quite interesting, well, a few interesting stocks I will look at in this video. So what I'm going to do in this video is go through some of the indices, American indices, also have a look at some really interesting American stocks, the majority of whom are falling right now and look like they might continue to fall for quite a while. However, also look at some interesting companies whose share price is going up. I had a look at one of those companies in a recent video, and that's Berkshire Hathaway. That is never a bad buy. Some might be hesitant because when Warren Buffett and Charlie Munger die, those two great investors will no longer have control of those companies. So there are a few investors wondering how Berkshire Hathaway will perform once those two great investors do die. So let's start off with this video and looking at the NASDAQ 100, the NDQ. And the reason why I'm saying it's getting really interesting now is the NASDAQ is right at a really important support level at just above 13,000. The reason I'm calling that a support level is we did see this level reached twice earlier this year, back in March, late February and also March. Then we saw a nice little bounce. However, we did see the NASDAQ down about 3.9%. It was on the Tuesday, the 26th of April. And I thought it might have done a bit of a rebound on the 27th, but it didn't. It was fairly flat. And if you actually zoom in, you can see this one doji, candlestick doji on the last trading day. And it's and when you see a doji, it just means the bulls and bears, there's no winners between the two. It's like they're like fighting each other. And that's where you see the beginning share price, or not the share price, the beginning price of the index, the ending price of the index was flat during the day with a large tail to the upside and a fairly large tail to the downside. The NASDAQ was up about over 1% at one point during the day and was flat at the end of the day. So the NASDAQ finished right on, or very near that support level. And if the NASDAQ does continue to fall, pushes through that support level, which will become resistance, the next support level is just above 12,200, which was a low way back in March last year. So possibly heading towards a 1-year low in the market. And you just see how the NASDAQ has turned around over the past, we'll say 4 or 5 months, particularly from the beginning of this calendar year. Before that, the NASDAQ was in a nice uptrend, a well-developed uptrend, and that uptrend has come to a completion. And right now, we can say that the NASDAQ is in a downtrend. Now, how long this downtrend will go, just don't know. The other thing you'll notice here, when you go to this uptrend, you'll notice every time there was a dip, now the dip fell either between the 50-day and the 100-day moving average. That's the two lines I have on this chart, the non-vertical, horizontal lines, I mean. And every single time the NASDAQ got either in between the 50-day and 100-day moving average, or just fell below the 50 or the 100-day moving average, we did see the NASDAQ bounce. We saw that quite a few times. In fact, once, twice, 3, 4, 5, 6 times. And then next time it failed and that's when the NASDAQ moved into a downtrend. And recently, we did the exact opposite. There was a bounce, the NASDAQ moved above the 100-day moving average for a brief period of time and then started falling again. So we're seeing the same signals in the downtrend, even though it's a sample size of 1 that we saw in the uptrend. So right now, a little bit more bearish about the NASDAQ than I am about the Australian markets. Now let's have a look at the Dow Jones, and not quite as bearish as the NASDAQ, simply because in this index we don't have quite as many tech companies, if any at all. So in the Dow Jones, you'll see much more mature companies, some big companies in this, but even though we are seeing mature companies, we are starting to see these companies under pressure as well with their share price. And the Dow Jones has moved from an uptrend into a downtrend with a few lower lows and lower highs. And if the Dow Jones moves below 32,400, which is a good support level, which was a previous low we saw a few months ago, that would be a bearish move. And then the next low would be about 3,000 points lower than that. So not quite as bearish on the Dow Jones as I am on NASDAQ, but still looking quite bearish. Now, looking at the S&P 500, which is a combination of some NASDAQ and New York Stock Exchange companies, this is fairly similar than the NASDAQ, right at a really important support level. If we just zoom in here, unlike the NASDAQ, which right now is just slightly below the support level, we're right, or the S&P 500 is right above that support level. And you can see this support level, and the reason I'm calling this a support level is it was reached 3 times during the start of this year, and then we saw bounces. So this is saying that this support level could be quite strong. And if we see another bounce, this would actually strengthen this support level. And if this support level is broken because it is strong, that would be another bearish move for this index, the S&P 500. And just like the NASDAQ, just like the Dow Jones, this was in an uptrend until the start of this year, and it has moved into a downtrend. Now, I'm just going to look at some individual companies, some of the biggest companies in the world, and some interesting companies as well. And these are companies, well, some of these companies I have put onto my potential buy watch list, particularly if I see these companies' share price fall by a significant amount in any sort of correction. I think it's very wise to have a potential buy watch list. And if a company does hit your buy-in price, particularly these large companies who generate significant amount of cash. I think it was Alphabet has $110 million of net cash on their balance sheet. So lots of cash. I think Apple had a lot of cash too, but they've been giving their shareholders back cash as either dividends or share buybacks. So this is Apple, and this is by far the less bearish company that I will look at in terms of the biggest companies in the world. So still in an uptrend, but looks like that uptrend is starting to wane, and we are seeing the share price starting to drop from its all-time high, which was $182.50. The recent low we saw a few months ago was $150, and right now we're just above $155. So if you do see the share price of Apple fall below $150, that would be a bearish signal. And if it does get that low, I think Apple's share price will have moved into a downtrend. We can confirm that right now. We have no confirmation with the trend of Apple. In fact, I'd probably say Apple's share price is going sideways right now in terms of the short-term movement. Long-term movement, share price of Apple is still in an uptrend. Now onto Alphabet. I am looking at this company's share price quite closely, and we are starting to see this share price of this company fall away quite significantly, particularly after their January results or December quarter results were released. The market actually did get a little bit excited. You can see, if I just zoom in here, you can see it was the 2nd of February, share price actually reached an all-time high at around about 3,042. That was on the back of their quarter results. The market liked it. I liked it. But ever since then, the share price has been falling. I think they did release the most recent quarter results, and that's why the share price has fallen again. There was a nice little support level right here at around about 2,500. You can see the share price quite often, about 4 times, hit that level and bounced off. And then it moved through that support level quite strongly about 1 week ago and has fallen a fair bit since then. In fact, it's fallen from that level, 2,500, to a current price at around 2,200. and 2,300. So definitely, share price of Alphabet has moved into a downtrend, and this is another case because the share price right now is at almost a one-year low. We just don't know how low the share price can go. But the further share price of this company falls, the more excited I will get, because this is one company that I definitely have on my watch list. In fact, I'll probably have this company near the top of my potential watch list or buy list. Now on to Netflix, and this company has been under significant pressure because they lost subscribers. I did a video on this company. Share price has dropped from a high of $700, which was reached in November last year, to a current price of less than $200. Yes, it just keeps on falling after that bad release. Share price fell another 5% on the 27th of April and is now at $188. So it's fallen from $700 to $188. If management can turn this around, this valuation, or the valuation of Netflix right now, does look enticing. But that's the big question. Can management turn things around? Can they stop the bleeding of losing customers or subscribers? Massive amount of volume has come in too. We saw pretty big volume come in when they released some sort of results in January of this year. You can see the share price fell on that day by 22% on pretty big volume, but even more volume is coming in. So we are seeing a significant amount of shares changing hands right now. So I would say a lot of fund managers are getting up because of this latest update, and the share price just continues to fall. This is the classic definition of a falling knife. We just don't know how low the share price can go for Netflix. But we do have an example. If you go back more than 10 years ago, when Netflix did go through a little period where they did lose subscribers and the share price did take a massive hit, then share price fell from $44 to $8. But management did turn things around, and that was the beginning of a significant re-rating of the share price and the valuation of the company. Not sure if that's going to happen again, but definitely have this company on my watch list, my potential buy watch list. I just want to see signs that things are turning around. Another company I think has significant potential for the future is NVIDIA, but I do think this was significantly overvalued when the share price got to nearly 350 million. It has pushed back, almost halved in value. So right now, share price is just above $180. It has also fallen through a nice little support level at $210. So the share price of NVIDIA has moved into a downtrend. And the best thing you can do, and this is just my opinion, you could have a completely different opinion, is when you see a share price of a company you like moving into a downtrend, you can remain patient, because there will be a time to buy this company. Probably not yet, because we just don't know how low the share price can go. So this is another company that I have on my potential buy watch list, and I will be following the company's fortunes quite closely over the next few months, potentially over the next few years, just waiting to see this negative sentiment wash away in the company. Now onto Microsoft, and I think this company did release some results and the market did like it. So the share price did bounce 4.8%. I do have an all-in target for this company. That's $190. The current share price is $283. So a lot more to fall for Microsoft before I become really interested and go, maybe not all in, but I will take a position in this company. But again, just like all these other companies we have looked at, the share price of Microsoft is under pressure. And just because the market did like their results doesn't mean the share price will go higher from here, because we have seen, or we will see, a little bit of resistance moving forward. Share price is in an uptrend. There are shareholders who bought at high levels over the past 4 to 5 months, and they will be looking to sell out of their shares because the share price has fallen. So this is another company, fairly big company, one of the biggest companies in the world, if not the second biggest company in the world, that has seen a bit of pressure under the share price. And again, the more this falls, the more interested I will get in taking a position in this company. Now let's have a look at a less tech stock and a more, I don't want to say mainstream company, but maybe that's the wrong way to put it. But this is the Home Depot, sort of like Bunnings, but in America. And this has been, just like Bunnings, a very successful company. But again, just like some of these tech stocks we have looked at, these NASDAQs, NASDAQ's favorites, these biggest companies in the world, Home Depot has been under pressure over the past few months. Share price has fallen from $420 to $300. The reason I've included Home Depot on this particular list is the share price is hovering right on the very strong support level. And the reason I'm calling this a very strong support level is if you go back, and this support level was formed in June last year, every single time it reaches this support level, it just either bounces through or bounces back up over the support level or just remains above the support level. So I think there is a chance we will see Home Depot's share price break below this support level on strength. And if it does, that will be a bearish move because the share price has moved into a downtrend. There is a little bit of negative sentiment around this company right now as well. Now on to Walt Disney Company, or Disney. I thought it was just called Disney, but maybe I am wrong. This was a company I put on my watch list about a year ago. Share price was about $190, and right now the share price has dropped to about $115. So I'm quite glad I didn't buy the company at that point in time. I do think this company has significant potential in the future, particularly around the streaming division. Also, the movie companies they do own as well. Not as keen as on them amusement parks, but I think they will also play a role in the future of this company. So, well-defined downtrend. The share price of this company just keeps on falling. So a lot of negative sentiment around Disney, and the share price didn't move through. Won't say a strong support level, we'll say a fairly weak support level at $130, and just keeps on falling. And the share price right now at $115, the last time we saw it this low was actually way back in July of 2020, so just after the COVID-19 financial panic. So the share price of this company looks like it's dropping towards the lows we did see during that period. Next company I want to look at is Zillow Group. I haven't done much research on this company. I do know they're into property. Someone referred to Zillow Group as Australia or America's REA Group. Now, the company did go through some problems because what they were doing is they were buying properties, redoing them, remaking them, making them better, and then reselling. What's that called? I forget what that's called. And there were some problems in that, and they've gone out of doing that right now. But the share price of this company has dropped from over $205 to a current share price of around or just under $40. So a significant decrease in share price for this company. What's that? That's a 75% drop in share price. So this company, in terms of valuation, in terms of potential, is starting to look more and more interesting. But just like all the other companies I feature in this video, share price just keeps on falling. Well-defined uptrend or downtrend, which developed almost 1 year ago. So the share price of this company has been dropping for 1 year. And again, just like many other companies on the list, the further this has to fall, the more interested I will get. I haven't done much research on this company, but I think this is one of the companies that I want to do a little bit of research on, simply because the person did mention this is America's REA Group. And we know REA Group has done significantly well over the past decade. Now on to Amazon, and I still think Amazon is one of the best companies in the world simply because of their Amazon Web Services, or AWS. But the share price of Amazon has really gone sideways over the past 18 months. You just see it going sideways. There was actually no reason to buy into this company at all because there was no uptrend and no real downtrend at all. You can just see those two moving averages very close together, wobbling around, not doing anything. But we have seen the share price starting to move down. So you could say the share price of this company has moved into a short-term downtrend. And if the share price falls below that 2,700, which was the previous low we saw a few months ago, that would be a bearish signal. Now, I have put it all in target at $2,200. So this is when, or the valuation when, this company does become attractive to me. Won't go all in, but that's when I might start taking a position in this company. This is one of those companies where I think, this is just my opinion, would be beneficial to have in your portfolio. Now onto Shopify. And a couple of reasons I wanted to include this company. Now, Shopify, I haven't done much research on this company. I'm pretty sure they're in online retail, and online retail is going to be a growth area over the next few decades. And I think what's happening in share price right now is just short-term negative sentiment in that space. You're seeing this with a lot of Australian online retail companies like Kogan, Temple Webster, companies like that have fallen a fair bit. So I think there is an opportunity here, or potential opportunity in the future. Shopify's web or share price has dropped from a high of $17.60, which was reached in November, and is just above $400 right now. So the share price has dropped 75% in 5 months. And the last time the share price was this low was way back during the COVID-19 financial panic, when the stock market started to recover. In fact, the low for this company during that period was just above $300. And there's no reason why the share price of this company can't get to that low again. And if it gets to $300, this company does start to look really enticing, because I do think the market is overreacting right now. And when the market does overreact, that's the time you want to buy high quality companies. The question whether Shopify is a high quality company, I think, comes to your own personal opinion. And that's why I want to do a little bit more research on this company. Now, not all companies are doing badly right now. This is Walmart. And Walmart is going up. It's actually in a short-term uptrend, particularly over the last few months. You can't say, when you look at the long-term chart, it's been going up forever. So this is one of those high-quality companies, one of those companies that has fairly low margins, but just because a company has fairly low margins doesn't mean it's not a quality company. They know what they do. And I'd say this is probably the most, in terms of what they sell, in terms of revenue, I'd say this is the biggest company in the world in terms of revenue. Now, I could be completely wrong there, but I can't really imagine another company that sells as much stuff as Walmart. But because they have low margins, a lot of that revenue doesn't really turn to profits. But because of the amount of revenue, they still have a lot of profits, and the company keeps on growing. And that's why the share price is increasing. And the share price of this company, unlike all the other companies I've featured in this video, is right now in an uptrend. So just because there is weakness in the overall market doesn't mean every single share price of every single company is falling. There are some share prices of some companies rising, and Walmart is one of those companies. I do have a few car companies, automobile manufacturers on my watch list: General Motors, Ford, Volkswagen. If I had to pick between those three, I definitely choose Volkswagen because of their push into EV. Now, General Motors and Ford are pushing in that area, but Volkswagen, I think, will be the main competitor for Tesla, and I think eventually Volkswagen will overtake Tesla. So I think there is way more value right now in Volkswagen over Tesla. The one thing Tesla has is their self-driving capabilities, and if they do succeed, or the first company to succeed in that area, that's where you might see value in Tesla. Anyway, on to General Motors. I'll just zoom in a little bit here. General Motors was looking interesting about a year ago, but just like many other companies, many other tech companies, share price of General Motors and Ford, haven't looked at Volkswagen for a while, has been under pressure. Share price of General Motors has fallen from $66 to current share price of $38. Now, I don't know if there's any reason behind that, but I am following these companies quite closely in terms of what they're doing in the EV space. And if I see some growth, some significant growth in those areas for either General Motors or Ford, that's when these companies would become way more interesting. Now on to Zoom, and this was a company that saw significant tailwinds in their product during the COVID-19 financial panic. Not during the panic itself, but during all the lockdowns and those sort of things. That's why we saw the share price rush up to $580, which was reached in October of 2020. And as soon as this news of the vaccine came out, that's when the share price of this company started to fall. And it's fallen from that high of $580 to lower than $100. And we are seeing the share price move lower than what we saw during the COVID-19 financial panic, which is quite silly in my opinion. So the low we saw during the panic was actually around about $115 or $110, $115. The share price right now is less than $100 for this company. So again, I think what the market is doing here, because of the overall negative sentiment in this company, it's driving the share price of Zoom lower than I think the real or the good valuation of this company is. So that's why I have Zoom video onto my potential buyer watch list, just because of this overall negative sentiment in this company, driving the valuation down lower than fair value. Now on to TSM, which is Taiwan Semiconductor Manufacturing Company. I do like this company. I like the potential future growth in Taiwan. We'll just call them TSM from now. But we are starting to see share price drop, which does excite me. So we did see a double top. Share price reached about $142.50 twice, once in February last year, and then again in February of this year. So a 1 year gap between those tops, and the share price was sort of moving sideways in between those two tops. And now share price has fallen from a high of 145 to a current share price of just above 90. So the share price has about third, or been cut in third, or the valuation of the company has been cut in third over the past 4 months. But again, share price is dropping. And the further this company share price drops, the more excited I get. So I actually have put this company onto my potential buy watch list just because of the future potential this company does have. Now, one company I don't have any want or need to acquire, and that's Airbnb. I don't know if this company is going to succeed in the future or fail, and I think the market is unsure as well, because the share price of Airbnb has just been going sideways ever since they listed on the NASDAQ in late 2020. We have seen share price reach a high of $220 and reach a low of just above $120. And it's really been trading in that range ever since there. Right now, it's at $150. So I have no interest in this company. The only reason I'm following Airbnb is just because it's an interesting story. And I just don't know if this company will be successful, because I have never used Airbnb. I will never use Airbnb. I don't understand why anyone uses it, because you can actually get hotel rooms cheaper, it seems, than Airbnb. I've actually checked this out when I've gone on overseas trips, and I'd probably rather stay in a hotel than stay in someone's private house, even if they're not living there. That's just my own personal preference. So you could have totally different opinions, but there are some troubles I have read lately with people using Airbnb. So that's why I am following this company, not because I have any interest in buying these companies' shares. Now onto a company whose share price actually is increasing. That's Marriott International, a hotel. Yeah, I could have shown you Hilton. Share price of that company is also going up. So this company's share price has been in a nice uptrend over the past 2 years, increasing from about just above $80 to a current share price of $180. So it's actually more than doubled in the last 2 years. No reason, if you're holding these shares, to sell out right now, because the share price just keeps on increasing. Nice, well-defined uptrend. And this is one of those companies that you could be holding during these tumultuous periods. And I think this is sort of one of those open up stories. And more people will be using hotels as we move forward. As I mentioned, I probably would rather stay at a Marriott hotel than at an Airbnb. Again, that's just my own personal preference. And maybe that's why the share price of this company is going up. Maybe a lot of other people are just like me. The last two companies I want to show you in this list are probably the most bullish companies I did find, or maybe not found, but I have included in this video. And the first one is Costco. And this is a wonderful company. So we've already talked about Walmart, or I've already talked about Walmart and how low their margins are. But Costco, competitive advantage over Walmart is their margins are actually even lower, but they just sell so much stuff and people just love Costco. And the share price of this company just keeps on rising and has kept on rising. In fact, the all-time high recently of 610 was reached. We have seen a little bit of a pullback, and potentially this pullback from $610 to just above 550 could be a potential time to take a position in this absolutely wonderful company. So people talk about how gross margins or just even profit margins are very important for a great company, but Costco is the perfect example of a great company that has low margins. They know what they're about, they know their competitive advantage, and they are using that to become not to become a great company because they're already a great company, but to continue to grow in right now and in the future. So Costco is an example of a company that I'd love to own for the long term. So that's why I have put this company on my potential watch list. And if I see a significant correction in the share price, that's when I might take a position in Costco. Now, I've already talked about Berkshire Hathaway in one of my recent videos. And this is one of the best companies in the world because it is run by two of the best investors in the world that we've ever seen, living or dead. And there are times when people say Warren Buffett has lost it. And right now is the time when Berkshire Hathaway outperforms the market. And that's why you are seeing a share price moving up and continues to move up. Just like Costco, we have seen a little bit of a pullback in the share price. Share price right now is in between the 50-day and 100-day moving average. And that is potentially a time to take a position in this company. Share price of these shares, which is their B shares, has pulled back from 360 to 330. So only about 10% drop in share price, nothing too much, but just to buy the dip opportunity for this absolutely fabulous company. And that's all I have for this video on a bit of an update to the American markets and just looking at some shares, some companies on the American markets that I'm interested in buying or I do follow. So quite a few of these companies are on my potential buy watch list. And if we do see a significant correction in the market, I will take positions in these companies. So I think it's very important to have a potential buy watch list of some of these, or that includes some of these really fabulous companies. If you don't know how to invest in American companies, that's something you should look into. There are trading platforms that you can use where you can buy American companies, Self Wealth, I think even Superhero. You can even buy international companies on ComSec, those sort of things, but you have to look into it. So I would suggest you do that. I prefer to buy individual companies over ETFs because when you buy an ETF, and this is my opinion, you will buy some companies you will never want to have a position in. That's just the nature of ETFs. So that's why I like to stock pick, because I can not include any companies I don't like in my own portfolio. You cannot do that with ETFs. If you have any questions about anything I've talked about in this video, just leave a question, or if you have comments or thoughts about any of these American companies, leave it in this the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.